Huntington Ingalls Industries, America's largest military shipbuilder, the only company that designs, builds, and maintains nuclear-powered aircraft carriers and a major builder of nuclear submarines and surface combatants.
FY 2025 revenue $11.7 billion. Q1 2026 revenue $3.1 billion beat estimates, record backlog of $54 billion.
Newport News Shipbuilding traces to 1886 Virginia, a century of building America's most powerful warships, including every nuclear-powered aircraft carrier since USS Enterprise in 1961.
Northrop Grumman acquired Newport News in 2001, combining it with Ingalls Shipbuilding in Mississippi. In 2011, Northrop spun off the combined shipyards as Huntington Ingalls Industries on the NYSE.
HII added Mission Technologies in 2021 through the acquisition of Allianz Science, expanding beyond physical shipbuilding into defense IT, cyber, and autonomous systems to capture digital defense spending.
Newport News Shipbuilding generates 53% of revenue, building and refueling Gerald R. Ford-class carriers and Virginia-class nuclear submarines for the United States Navy.
Ingalls Shipbuilding contributes 20%, building Arleigh Burke-class destroyers and San Antonio-class amphibious ships. Mission Technologies adds 27% in defense IT and cyber services.
FY 2025 revenue $11.7 billion at 6% shipbuilding operating margin, free cash flow $500 million, backlog of $54 billion, provides over 4 years of revenue visibility.
Q1 2026, revenue $3.1 billion, up 13%. GAAP EPS $3.79 beat the $3.72 estimate. Record new awards of $4 billion pushed total backlog to $54 billion.
General Dynamics operates Bath Iron Works, the only other builder of Arleigh Burke destroyers, and Electric Boat, which partners with HII's Newport News on Virginia-class submarines.
L3Harris and Leidos compete in the Mission Technologies segment. No competitor can build nuclear aircraft carriers. HII is a pure monopoly on the Navy's most critical capital assets.
HII's moat is statutory monopoly. Congressional law and national security require that only certified shipyards with specialized nuclear infrastructure can build and service the U.S. carrier fleet.
HII operates 2 major shipyards, Newport News in Virginia for carriers and submarines, and Pascagoula in Mississippi for destroyers and amphibious ships, with Mission Technologies offices nationwide.
The $54 billion backlog includes 3 Ford-class carriers, multiple Virginia-class submarines, and a growing block buy of Arleigh Burke destroyers, providing clear revenue visibility through 2030.
Christopher Kastner became president and CEO of Huntington Ingalls in February 2022, previously CFO, where he led HII's capital allocation transformation and the Mission Technologies build-out.
Kastner joined HII at its 2011 spin-off and served in roles spanning finance, strategy, and operations. His CFO tenure produced HII's first meaningful return of capital program and the Allianz acquisition.
Huntington Ingalls Industries, America's largest military shipbuilder, $11.7 billion in FY 2025 revenue, with statutory monopoly on nuclear aircraft carriers, $54 billion in backlog, and Mission Technologies expanding the defense tech footprint.
Q1 2026 revenue $3.1 billion, up 13%. EPS $3.79 beat estimates. $4 billion in new awards pushed backlog to a record $54 billion. FY 2026 shipbuilding revenue guided $9.7 to $9.9 billion.
If the United States needs a nuclear-powered aircraft carrier or attack submarine, there is only one place it can go: Huntington Ingalls Industries. HII is the nation's largest military shipbuilder and one of the most strategically essential defense contractors in the country. Q1 2026 was a record revenue quarter. Today we break down the results and the investment case for this extraordinary defense infrastructure company.
Huntington Ingalls Industries was formed in 2011 when Northrop Grumman spun off its shipbuilding businesses. It comprises Newport News Shipbuilding in Virginia, the builder of nuclear carriers and submarines, and Ingalls Shipbuilding in Mississippi, which produces surface combatants, including Arleigh Burke-class destroyers and amphibious assault ships. The company also has a fast-growing Mission Technologies segment providing advanced defense, IT, and systems integration services.
The shipbuilding business model is cost-plus and fixed-price government contracts, with revenue recognized over the multi-year life of construction programs. The U.S. Navy is the overwhelmingly dominant customer. Virginia-class submarine construction, Gerald R. Ford-class carrier work, and the destroyer program constitute the core workload. The nuclear shipbuilding work requires unique skills, facilities, and security clearances that create an effective monopoly. HII is the only company that can do this work.
Revenue for Q1 2026 came in at $3,099 million, up 13.4% year over year. Analysts were expecting approximately $2,750 million. A meaningful beat driven by accelerating program work across submarine and surface ship programs. The Mission Technologies segment also contributed above-plan growth from government IT services contracts.
Earnings per share of $3.79 beat the consensus estimate of $3.70. A solid beat on the bottom line as well. Gross profit was $408 million, for a gross margin of 13.2%. Defense shipbuilding margins are lower than commercial aerospace because of the complex cost structure and the nature of large government programs, but HII's margins have been improving as newer program contracts carry better economics.
The Virginia-class submarine program is the flagship. HII's Newport News facility is the lead builder on the Navy's most important attack submarine program, the Virginia-class, which is America's primary undersea warfare platform. The Navy wants to accelerate to 2 boats per year. HII has been ramping workforce and supply chain to meet that target. Every submarine delivered ahead of schedule strengthens the relationship with the Navy and supports future award decisions.
AUKUS is the emerging catalyst that most defense sector models are not fully pricing. The trilateral security agreement between Australia, the United Kingdom, and the United States includes a plan to provide Australia with nuclear-powered submarines. HII's Newport News facility would play a central role in training Australian submariners, potentially hosting Australian boats, and eventually contributing to Australian submarine production. This represents a generational demand expansion for HII's most profitable product line.
The backlog of approximately $48 billion at quarter end represents over 5 years of revenue at current run rates. That backlog is almost entirely with the U.S. government, a creditworthy, committed customer that does not cancel programs lightly given the national security implications. For investors seeking earnings predictability, HII's backlog provides a degree of visibility that almost no other defense company can match.
CEO Chris Kastner reaffirmed full-year guidance and highlighted workforce development as the primary operational priority. HII is in the middle of a significant hiring and training effort. Nuclear shipbuilding requires years to develop qualified tradespeople, and the ramp in program work requires more of them. The labor market for skilled trades in defense shipbuilding is tight, and Kastner has been direct about the challenge and the investment required to address it.
Chris Kastner became CEO in 2021 after leading HII's Technical Solutions segment. He is an engineer and program manager by background, the right profile for a company executing on complex, long-cycle government programs. His consistent message has been operational execution. Deliver submarines on schedule, manage costs on fixed-price contracts, and grow Mission Technologies as a margin-accretive overlay to the shipbuilding base.
The bull case is simple. The Navy needs more ships and can only get them from HII. Defense spending as a percentage of GDP has been rising globally. Congress has been consistently supportive of shipbuilding budgets. The geopolitical environment, China's naval expansion, Indo-Pacific tensions, Russia's posture, creates a demand backdrop that points to sustained or increased program work for a decade or more. HII is the sole source provider to the only customer that can fund this backlog.
Mission Technologies is the growth overlay that investors should not overlook. This government IT and advanced systems business has been growing at double-digit rates. It serves defense and intelligence community customers with cybersecurity, systems integration, autonomous systems, and C5ISR services, command, control, communications, computers, combat systems, intelligence, surveillance, and reconnaissance. These are high-priority defense spending categories, and Mission Technologies has strong contract vehicles in place.
The bear case is margin pressure from cost overruns. Fixed-price shipbuilding contracts are unforgiving when labor costs, material costs, or schedule slip. HII has taken charges on several programs over the past few years as inflation hit the shipbuilding supply chain hard. While recent program margins have improved, the legacy of fixed-price commitments made before the inflation spike creates ongoing risk to near-term earnings if costs do not normalize.
Labor is the critical constraint. Building a nuclear submarine requires welders, pipe fitters, electricians, and nuclear-qualified technicians who take years to train. HII's workforce headcount drives production capacity, and in a tight labor market, the competition for these skilled workers is real. The company has invested significantly in training programs and compensation, but the workforce development cycle is long, and the ramp to 2 submarines per year depends on successfully executing it.
On the balance sheet, HII carries a moderate debt load relative to its consistent cash generation. The company has been disciplined about capital allocation, returning cash through dividends and buybacks while investing in facilities and workforce. The shipbuilding business generates predictable cash flows tied to contract milestones, and the capital structure reflects that stability.
The bottom line, HII beat estimates in a record revenue quarter. The submarine and surface ship programs are ramping, and the mission technologies business is growing. The geopolitical backdrop has never been more supportive of defense shipbuilding investment. The primary risks, margin pressure, and labor constraints are real but manageable. For investors seeking defense exposure to a company with decades of backlog, sole source positions, and genuine national security relevance, HII is difficult to replicate.
Huntington Ingalls is the only company in the United States capable of building nuclear-powered aircraft carriers and one of 2 companies capable of building nuclear submarines. That is not a market position. It is a national security monopoly. The Department of Defense has no alternative supplier for CVN-class carriers, which means HII's shipbuilding revenue is insulated from competitive bidding dynamics that affect most defense primes. The risk is not competition. The risk is program schedule, inflation, and workforce capacity, all of which matter when you are building a $10 billion ship over 8 years.
The submarine production bottleneck is the most important near-term dynamic for HII. The Virginia-class submarine program is currently running behind schedule due to supply chain constraints in specialty steel electronic components and skilled welder availability. HII and General Dynamics, which builds the other half of the Virginia-class boats at its Electric Boat subsidiary, are both working with the Navy to accelerate production. The AUKUS agreement, which commits to delivering nuclear submarines to Australia, has added additional urgency and funding to the program. HII has stated it is hiring aggressively to close the workforce gap.
Mission Technologies, HII's technical services segment, is the growth vehicle the market is not pricing correctly. The segment provides cyber, digital, and mission-critical IT services to Navy and Marine Corps customers. Revenue has grown at approximately 12% annually for 3 years. Operating margins at Mission Technologies are lower than shipbuilding, but the capital intensity is also much lower, meaning the segment generates stronger free cash flow per dollar of revenue. As Mission Technologies grows toward 40% of HII's total revenue, it changes the company's overall free cash flow profile materially.
HII's dividend and capital return program reflects management's confidence in long-term cash flow visibility. The company has grown its dividend in each of the past 12 years, and the current yield of approximately 2% is modest relative to peers, but supported by strong free cash flow. HII's backlog of approximately $48 billion represents approximately 7 years of revenue visibility, the longest coverage ratio in defense. For investors who want defense exposure with predictability, HII's contracted revenue stream is one of the most reliable in the sector.
This is financial education, not personalized investment advice. Defense contractors carry government budget, contract, and regulatory risks that require careful individual analysis. Review HII's SEC filings and consult a licensed financial professional before making any investment decision.
Ooh-wee. Scooby-Doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall